Hello, and welcome to another edition of Insurance IQ, where we try to provide useful tidbits each week that the insurance consumer will find useful when they're looking for their next insurance policy. This week, I wanted to change it up a little bit and talk a little bit about auto insurance for the first time. Specifically, why does my auto rate suck? Well, there's a lot of factors. There's so many factors I couldn't squeeze it all into a 2-minute video, but I wanted to cover some of the primary drivers. A lot of it will be surprises, some of it will be intuitive information about it, but I wanted to cover a couple of top drivers of insurance rates, pun intended. The overall answer is that math and data drive insurance rates. So the number one big factor that is kind of the elephant in the room that people rightfully disagree with and that people are actually trying to change at a consumer advocacy level is your credit score. Your credit score, when it's high, rewards you with very low rates. It rewards you with very low borrowing percentages and interest rates as well. It rewards you with low rates across the board no matter what you do. Insurance is not an exception. So low credit individuals pay more for insurance than high credit individuals. And again, it's not necessarily intuitive or fair by a lot of metrics, but the data suggests that strong borrowers or high credit scores have better loss ratios than those with low credit scores. So one of the main factors is developing and improving your credit if you want to switch carriers and find a better place for a better rate. Age of the driver. Age is a huge factor, and this is a little bit more intuitive. It's a little bit of a reverse bell curve. So when you're a teenage driver, teenage drivers have really, really bad loss ratios. They crash all the time. Moderate to severe accidents are all way, way, way up with teenage drivers. And then it gets better and better and better through your life, generally speaking on average, as you age and get through. And then as you get a little bit older, the rate goes up again as you become potentially only data-driven, on average, become a little bit more diminished capacity, and the elderly also pay more for insurance rates as well. So you'll see a little bit of a bell curve there. Insurance myth about age 25, there's not a hard, fast age of 25 insurance reduction in premiums. You don't turn 25 and then go shop and it magically reduces your insurance rate. It's simply an age indicator for when your insurance rates start becoming less punitive for you being a youthful driver. On average, a 20-year-old will pay more in insurance than a 26, 27, 28-year-old, and that will continue to improve until you become a more elderly driver. So age is a big factor. Zip code and location. If you are downtown Minneapolis and you have an insurance rate, and then you are in the middle of a new development in Farmington that was previously a farm field 10 years ago, just the sheer volume and severity of claims is completely different from a data set. There are more accidents, more break-ins, more payouts in downtown Minneapolis just from a sheer volume standpoint than there is in Farmington. Therefore, insurance carriers will have better loss ratios than otherwise in downtown Minneapolis versus like a Farmington or a Lakeville or an outer ring suburb. So generally speaking, when you're more in a city, you're going to pay higher rates, which again is fairly intuitive. Another one that a lot of people don't realize is insurance history plays a large role in the rate that you pay. So if you have a lapse in your insurance, you get punished. Even when the lapse is reasonable, like I didn't have a car or I wasn't driving, carriers will charge you more or make you ineligible for an insurance policy when you don't have prior insurance. Your insurance limits, your bodily injury limits, which is a topic for another video, your liability limits that you carry, whether they're good or bad, impact your insurance rates commensurately. So if you have very high, robust insurance limits, you will pay less, all things being equal, than a person who has very low or state minimum insurance limits on their policy. Because again, this is all data, and it's an indication that you are a safer, a better risk on paper with actuarial data. And then again, the continuous insurance. So the longer you're with a carrier and the more time you log insurance coverage continuously, 7, 8, 9, 10 years, you get rewarded by your future carrier because it's an indication that you are stable, that you are a better insurance risk on paper. So insurance history is a big factor there. Carrier, who you have your insurance with, it all depends on the data. Some carriers that sell online, like the Geicos and the Progressives, cater towards the youthful, single auto, lower credit score, urban insurance producers or insurance purchasers in a lot of ways. The Geicos and the Progressives are targeting the new, I'm getting my own insurance policy type demographic. The more established, like agent-driven, value-driven carriers like the State Farms and Farmers and Allstates and Liberty Mutuals of the world, They reward the high credit score, suburb zip codes, bundled policies with auto, home, and umbrella, more credit score sensitive as well, because all of their data indicates that they can charge different rates for different people, and that's kind of the demographic they want to go after. So Geico and Progressive write a ton of business for youthful drivers buying their own first insurance policy, and it makes a lot of sense. They are, in a lot of cases, on average, going to beat out the agent-driven, value-driven carriers that you know, like the Farmers and the Allstates and the State Farms and things like that, on average, because those are the clients that they're going for. So again, there's so many other factors going into it as far as like garaging location and kids at school and kids on their mom's policy versus their own policy that you can factor into. But generally speaking, credit, age of the driver, location of the car, your insurance history, and the carrier that you choose are 5 massive indicators of the rate that you will be paying for your auto insurance rather. So again, thank you for listening, and it's a great question to ask yourself, what is your insurance IQ regarding your insurance rates?